Today I want to talk about how Ken Griffin will soon be banned from the stock market entirely, after 10,000 plus investors have demanded that Ken not only be banned, but investigated for fraud as well. I also want to talk about how some banks have stopped lending out AMC shares because it's become too risky. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, as you can see, G-Man tweeted saying that 10,000 investors demand that Citadel securities be banned from the stock market and for Ken Griffin's fraud investigation. The Investor Turf article says to find out why 10,000 investors are calling for Citadel securities to be banned from the stock market and for Ken Griffin to be investigated for fraud. It says our comprehensive coverage provides insight and analysis on the latest developments in the finance industry. It says that Investor Turf conducted a poll among 10,000 investors, which revealed there are many calling for Citadel securities to be banned and for an investigation into its founder, Ken Griffin. The reasons behind this call for action includes concerns over market manipulation, conflicts of interest, lack of transparency, and potential insider trading. Now, I personally would really like to see this go to a petition where investors can sign against the petition to the point where it has to be deliberated by Congress. I think we could absolutely get a petition like this trending and absolutely rack in tens of thousands, if not hundreds of thousands of signatures. It says that investors are calling for a ban on Citadel securities, accusing the company of rigging the market to their advantage. According to an insider, the high-frequency trading game is being manipulated by insiders who wield their influence to sway the markets in their favour. And the insider has shed light on the dark corners of high-frequency trading by exposing malpractices carried out by Citadel Securities and other high-frequency trading firms. And the insider has revealed how Citadel Securities also uses its market power to manipulate the market to their favour by creating artificial liquidity in a particular security, making it easier for them to execute trades at their desired prices. That obviously refers to those infinite liquidity fairies that can somehow create liquidity in a stock that has very thin or almost no liquidity. Basically saying they can create shares to be traded or create shares for a trade to be settled. But it seems that banks are starting to wise on as to what's actually going on in this securities lending market and are pulling out. As Hang Loose has tweeted, he said, wow, this is a massive indicator that risks associated have gotten out of control. Because as 741 Trey tweeted, he said the HSBC Bank is to retire their stock loan or borrowing custody and clearing services, effective close of business April 21st. It says here that HSBC Bank are retiring their account for custody and clearing services for stock loans and borrows. This isn't just applicable to AMC, but it's applicable to all shares that have been lent out or borrowed by HSBC. They're basically stopping the practice for themselves market-wide. This is effectively one less source that these hedge funds and market makers can use to locate AMC shares. Without HSBC providing shares to loan and to borrow, that effectively makes the pool of available shares even smaller, driving up that interest rate on the AMC cost to borrow. And I think as more and more banks catch on to how many shares have been created by these infinite liquidity fairies, more and more banks will be pulling out. And again, that's just going to make that pool of available shares smaller and smaller, continuing to push up the cost to borrow fee for AMC higher and higher. We know it currently swings around 300 to 1,000% every single day, sometimes topping over 1,000% and even higher. And obviously as more and more banks pull out, this number will start rising to 2,000%, 3,000% and above. And especially as the short thesis for AMC dies off even more, there's going to end up being more of these hedge funds and market makers that are stuck in their short positions. Obviously, when there's more and more shares of AMC trading, aka when there's more and more shares of AMC being sold for a cheap price, that gives the opportunity for these shorts to exit out of a small portion of their short position at a low price. But obviously, as we stop seeing shares being sold due to AMC improving as a company and the short thesis effectively disappearing, it's going to mean these shorts will struggle more and more. They won't be able to escape any of their short position, let alone just a small portion or a large portion, and they will be forced out of their short positions via liquidations. Guys, if you haven't already, please be sure to sign up to Moomoo, the sponsor of today's video, using the link in the description below. You can currently get up to a whopping 15 free shares, entirely commission-free trading, free level 2 market data, and most importantly of all, Moomoo is very easy to use, it's very clear and simple. They've got tons of technical indicators and advanced charting tools. Especially as Crystal Ball tweeted, he said, what are the shorts going to say when AMC turns profitable? They would try and say, oh, but it's not enough profit to pay off the large debt load. But then what about when AMC uses its huge cash reserve to pay down all of the remaining debt and AMC becomes even more profitable as they don't have any interest expenditure? These shorts are going to be running out of more and more excuses as AMC brings in more revenue and reduces their costs at the same time to increase profits. Now you may be saying, Tom, okay, great, all of these extra revenue lines for AMC are brilliant, the popcorn, the credit cards, and so on. But what about their core offering of movies? Are more people attending the movies right now than pre-pandemic levels? Surely not, right? Well, as Unusual Wells tweeted, he said there are no signs of weakness in movie theatres. The weekly data for box office grosses is rising and now above pre-pandemic levels. This red line shows 2023, and we can see that we've been consecutively above 2021 and 2022, and we're even setting a number of months above 2019 pre-pandemic. If the box office continues on this current trajectory through the remainder of this year, I imagine AMC will be doing very, very well and generating not only more profits, but more revenues too. Now you may have seen this tweet that says the short's ultimate goal is to make their target bankrupt. They do this by seller boxing the company, pushing the price down so much to the point where it has no possible avenues to raise additional cash, not through debt financing and not through raising equity either. And therefore the company has only one option, which is to declare bankruptcy. And he said that's why we need to keep fighting these shorts. They may have won the battle against Bed Bath & Beyond and many companies before that, but we will win the war. This article says the Bed Bath & Beyond shareholders are asking about naked short selling or the creation of synthetic shares. It will be very interesting to see if, as part of Bed Bath & Beyond's bankruptcy, they investigate synthetic short selling in greater detail and end up bringing lawsuits as a result. It says that Bed Bath & Beyond said on Monday that it received several inquiries from shareholders related to naked short selling, but that it had no specific access to information on share lending for short selling transactions. Now this is obviously something we know. The CEOs of these companies, whether it's Bed Bath & Beyond, AMC or GameStop, don't have access to the transactions in their shares. That data and that information is kept by the stock exchanges themselves and the market makers, who obviously won't disclose that information. So it would be interesting to see if Bed Bath & Beyond do try and investigate this further and end up bringing lawsuits against some of these market makers. And one veteran technical analyst says that markets are currently facing a black swan event with nowhere to hide. Now obviously we in the AMC, GameStop and meme stock community have spoken about a black swan event for some time now. A black swan event would be something like a short squeeze happening in GameStop, AMC, Bed Bath & Beyond or any of the other meme stocks that causes effectively a market-wide crash. A short squeeze of such magnitude would obviously destroy a number of short-selling companies, a number of hedge funds, and likely a number of market makers too. If that were to happen, they'd be forced to not only close out of their short positions, but also sell off tons and tons of their long positions too. That means that hundreds of millions, if not billions of shares would flood into the market across pretty much every single company out there, crushing prices in basically the entire S&P 500. And that black swan event would obviously end up causing this stock market crash, or vice versa, the stock market crash may end up causing the squeeze, but effectively there's nowhere to hide. He said there's nowhere to hide and there's no diversification in this type of market. Now Beerman is basically saying there's no safe haven or there's no hedge in this stock market crash that's about to happen. Now obviously, as we've said, we know that meme stocks are likely to be this safe haven or this hedge because as the wider market falls, it will end up squeezing the shorts, pushing the prices of our stocks upwards. But he said this is a black swan event and that it's a bubble that can be burst at any time by an exogenous cataclysmic risk event or any number of factors. And he said the warning comes as earnings season is off to a wobbly start, with big banks mostly beating estimates, but other firms and pretty much all tech companies all reporting disappointing results. And bearish commentators say that earnings expectations are still too high given the current storm of macro headwinds. And Morgan Stanley is expecting the worst earnings recession since 2008 to come over the next few months. This obviously could result in tons of these stocks falling, crashing the S&P 500 and causing meme stocks to obviously squeeze as a result. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers!